Hey, good morning. Hey, I want to jump into reverse mortgage topic for purchases. My name is Kevin Brierton, certified mortgage planning specialist and your no excuse lender. Wanted to touch base on a few things. This is an important strategy. I just talked to a past client of mine with this strategy, and I think it's really important to share. A lot of realtors and clients don't know that you can use a reverse mortgage for a purchase loan. This is extremely important because it could solve problems that clients are currently having right now. So this client needs to move for a couple different reasons into a different neighborhood, and they're looking at their finances. She's 70 years old, winding down her business, doesn't really want to take on a bigger expense, but wants to move, and really is looking to do kind of a lateral move. But the payments, she's probably gonna have to go up a little bit in price, and obviously interest rates are higher. So we're looking at buy down strategies and different things, just not cutting it. So then I presented an option with a reverse mortgage. So I'm not going to get into all the little details, but I want to go over a couple of the highlights that are important. She's looking to sell her house. She'll have about $400,000 to put down. And in this case, on reverse mortgage, there's a couple key takeaways I want you to take away. Reverse mortgage, the client needs to be at least 62. So they have to be retirement age. So 62 is the key number. The other number is they have to be putting down at least 50%, give or take. So 50% is a good starting point. Some people have to put a little bit more, a little bit less down, depending on their exact age. But about 50% down is the key. The other key, the big objection I get a lot of times talking about reverse mortgage is that they think they're going to have to give up the ownership of their house. So they don't have to give up the ownership of the house. I actually showed this real time to the client we were talking to, and they said, "Oh, my neighbor has a reverse mortgage. They don't own the house." And I looked at what's their address. We looked up the address, and we pulled up their ownership and showed her that they do own the house. So it is important to understand they're not going to give up the ownership of the house. The other concern with reverse mortgage, and I actually heard it from my own parents when they looked at doing a reverse mortgage, is the costs are too high. So you have to look at the opportunity cost, but actually understanding the cost is important. So the reverse mortgage is very similar to like an FHA loan. It is actually still in the same line of types of loans, and so FHA pricing is similar on a purchase. So in this case, on a reverse mortgage, they're going to have to pay an upfront mortgage insurance premium, which is 2%. But this is of the purchase price. This is where people get kind of scared about this. They're going to have to pay 2% upfront, which is based on the purchase price. So in this case, if the price was $800,000, but the loan amount is only $400,000, starting loan amount, they will have to pay off the $800,000, 2% of that. So that number, $16,000, can be a little scary. Usually what it can be done is built into the total out-of-pocket expense. It is an out-of-pocket expense. So then you can actually get that to be paid by the seller, which is excellent too. That's another great strategy to do. And then on top of that, the reverse mortgage is going to have mortgage insurance. People with $400,000 down probably haven't paid mortgage insurance in their whole life, or if maybe years ago, and they're very opposed to it. So that is a big objection. So, but that 0.5% of the loan amount, 0.5% of the loan amount will be paid annually throughout the life of the loan, and that will be added on to the loan amount. Those mortgage insurance costs allow the program to exist. So if you think about it, it's all about how do we have longevity for programs that are really important to society and to seniors, to make sure that they can enjoy their retirement and make sure the numbers can work. These programs are extremely important to know they're out there and they exist. They solve a problem, which is a cash flow problem for the retiree. They don't give up ownership of the house, and the fees can be navigated through getting seller credits. So that you want to look at all these options and have this on the table, because here's the thing. What if a retiree sells their house, they avoid doing something like this because the costs are too high, then they get stuck in a situation where the costs really are too high. I'll give you an example. My parents actually ended up selling their family house after years. They ended up moving into a retirement community, beautiful community, but the HOA lot rent fee in the community they moved into is fairly high, and it could go up. They have to pay that out of pocket every month, right? So in their situation, they decided that the reverse mortgage was not the right situation, and they moved into this other community. But if you look at if they stayed in their house, they could have done the reverse mortgage and had zero outlay of monthly payment. And instead, they're actually having to pay a fairly large chunk in lot rent, and it might go up. So those are the concerns that we have to look at and educate. If you have anybody that is looking at a reverse mortgage or has any questions around it, please feel free to email me back on this email or call me at 480-553-8770, or just shoot me a text, which works out really well, and we can line up a time to chat through it, or let me know the scenario. Have an awesome weekend. Thanks for watching, and we'll talk to you on the next one. Bye.